Good morning, Namaskar, Suprabhat, Sat Sri Akal, Kem Cho, Vadakkam, Trasakai, etc. So I welcome you all in our today's session of income tax, in which we will be discussing the provision of salary. So in the last two sessions, we discussed the basic salary, arrear of salary, advance salary, certain allowances, the format, and certain compensations also we had gone through. And in the last session, we were about to start the perquisite part, in which the LTC provision was there. So I believe you must have gone through with the provision, whatever we have discussed in the class. And of course, you are working very hard to achieve the goal of your life to become a chartered accountant as soon as possible. So students, today we will be discussing the two very important perquisites, or you can say the two huge perquisites. One is rent-free house, which is utmost important, of course, as well as perquisite of car facility. They both are having complex structure. They both are having multiple provisions. So in my opinion, in every questions of salary, the concept, the point regarding the rent-free house taxability and car perquisite would be there. Matlab, I believe out of 10 questions, 9 times that these provision would be there in the question. Again, as I have told you earlier, that salary is not complicated individually. If you are going through with the individual provision, all provisions are not that much complicated, but I should say that rent-free perquisite is having 5 cases. Car perquisite taxability is also having multiple cases. So again, it would not be complicated, but little complex. But if you are logically going to solve these perquisite, you can easily solve these perquisite. Okay. So first of all, let me tell you that in today's class, I would like to listen from you that somebody will explain in short these three topics. First is gratuity if not covered under Gratuity Act. So if you are receiving gratuity, if your employee is receiving gratuity, which is from an organization which is not covered under Payment of Gratuity Act, then how we will calculate the exemption? There were 3 points, so someone will explain these 3 points in short. Then the second point I would like to listen from you, that is treatment of repayment of RPF and URPF. So treatment of repayment from RPF and URPF. So if an employee is receiving repayment from recognized provident fund and unrecognized provident fund, so what would be the taxability? That would be my second question from all of you. And third is leave encashment exemption calculation. So there are 4 points in calculation for leave encashment. So I would love to hear from any one of you regarding these 3 topics. So first comes first. First is gratuity if not covered under Gratuity Act. Someone going to explain it in short. And as I can see, Mag has raised her hand as usual. Very good, Mag. So please continue.
Good morning, sir.
Good morning.
So, in case of employees who are not covered under the Gratuity Act 1972, there is a three condition. First, gratuity received, and second is 20 lakh, and third one is 15 divided by 26 into monthly salary into year of services. In these three conditions, whichever is lower is exempted, and tax is received minus exempt.
I guess you mistake, Mahak. You explained the case in which employees covered under the Payment of Gratuity Act.
Yes.
I would
Sorry,
like
sir.
to listen the case in which
Yes,
employees are not covered under Payment of Gratuity Act. That means C case.
yes,
15
sir. Yes,
oblique
sir.
26 is B case.
Yes, sir. First one, sir, gratuity receipt. Second one, rupees 20 lakh, and third one is half of into average month salary into completed year of services.
Perfect. Very good. Second one, who will tell me the treatment of URPF and RPF if received at a time of repayment by an employee? Is there anyone who wants to explain in short the treatment of RPF and the URPF, the repayment treatment? We have gone through this point, this provision. in the last session also. So who will take the responsibility to tell me this? Good morning, Vijwal. Good morning, Meg. Good morning, Sridhar, Surinder, Ketan, SK Nam. Okay. Anyone is there to explain this? Okay. So the provision was very simple. It says that if you are receiving repayment from recognized provident fund, then that is not taxable because the contribution and the interest part we technically taxed at every year. So at the time of repayment from recognized provident fund, there would be no taxability in the hands of the employee. But in case of URPF, if you have gone through with the provision of URPF, you have seen that at a time of contribution and the interest part is not taxable yearly. So the whole amount is going to be taxed at the time of repayment from unrecognized provident fund. There would be four components what we are going to receive at the time of retirement. One would be the employee contribution aggregate amount. So employee contribution aggregate amount is not going to be taxed again. Then interest on employee contribution, that is going to be taxed under income from other source. The employer contribution component in aggregate and the interest thereon, that is going to be taxed under salary head if we are receiving that repayment from unrecognized provident fund. Clear? The third question was, who will explain in short the leave encashment exemption? Mehak again raised her hand. Sridhar also raised her hand. So I would ask from Sridhar. Yes, Sridhar, go ahead. Chandan also raised his hand. Visual also want to explain. So Sridhar, you can.
Good morning, sir.
Good morning. Good morning.
Sir, in leave encashment, एम्प्लॉय रिटायरमेंट के टाइम पे कैश लेकर जाता है, उसको लीव इनकैशमेंट बोलते हैं। उसके एग्जम्पशन के 4 कंडीशन है। फर्स्ट कंडीशन, अगर गवर्नमेंट एम्प्लॉय होगा तो फुली एग्जम्प्ट होगा, और अदर एम्प्लॉयज होगा तो पहली लीव इनकैशमेंट की अमाउंट, सेकंड स्टैट्यूटरी लिमिट rupees 5 lakh is 5 lakh नहीं, 25 lakh is 25 lakh exempted। और थर्ड कंडीशन है, एवरेज 10th month salary multiplied 10 divided by multiplied average salary divided by 10 और multiply by 10। और फोर्थ कंडीशन है, नंबर ऑफ डेज लिविंग इन द कैश बेसिस। मीन्स अगर वो 480 डेज की टोटल लीव है, तो अगर उसने कम ली होगी तो उसके वो डिवाइड करके उसको डिवाइड करके वो फिर उससे मल्टीप्लाई करेंगे।
श्रीधर थोड़ा सा टेक हो गया है, थोड़ी सी चीजें क्लियर नहीं है, आप एक बार रिवीजन कीजिए, दैट वुड बी करेक्ट, बट थैंक्स फॉर योर एफर्ट दैट यू ट्राई टू एक्सप्लेन। So Chandan, would you like to explain correctly this provision? Chandan, okay. Visual, you want to explain?
Yes, sir. Good morning.
Good morning.
Am I audible, sir?
Yes, yes.
Sir, in case of government employees, it's fully exempted. And in case of other employees, there are 4 conditions. First is amount received. Then second is 25 lakh statutory limit. And third is 10 into AMS. Basically, AM is the average salary, and 10, it means that deducted 10 will cross. So it is basically the 10-month salary, which is the average. And then fourth is leave earned in days minus leave availed in days, and then into AMS by 30. But in leave earned in days will be calculated like actual leave per annum or 30 days per annum, not more than 30 days per annum. So 30 days is the lowest. So whichever is lower, we'll consider that. And so lowest will be exempted. Now,
Perfect. Fine. Correct. Very good. Well done. So that was the provision of leave encashment explained by Visual perfectly. Very nice. So now we are moving forward for today's session. And of course, as usual, before starting the class, let's discuss the thought for the day. Or not discuss, just see this thought for the day. And it's very interesting. You can apply this in your practical life. And definitely this is going to help you a lot. You should get into the habit of asking yourself, does this support the life I am trying to create? So there would be situation in your day-to-day life that there will be some function in which you may be occupied for 2 or 3 days, or there will be certain circumstances. Maybe your friends are going to through a party or etc. So when you are going into this situation, please ask this yourself that whatever you are doing, is it going to help you for the future you are looking forward? And I believe out of 10 times, if you ask you this kind of question, at least 50% or 60% time, you will save your time for your studies. Maybe for 3-4 times, you will go for a party, etc. because you will see that there is not much time going to be occupied. But this is a very interesting habit. You should ask yourself that whatever you are doing, if you are involving somewhere, if you are wasting your time somewhere, just ask yourself this question honestly and answer this. And if the answer is no, you need to leave that thing. That is called sacrifice for this profession. Okay. That was thought for the day. You can practically apply upon yourself. And now we are moving forward for today's provision. In the last session, we were discussing the leave travel concession in India under section 10(5). And we have gone through with basic provision of this concept. It was saying that if your employer provide you any traveling concession in India, then you can have an exemption for a certain amount for that travel purpose if the travel is in India. If it is outside India, the full amount which has been reimbursed by employer is going to be taxed. And if the concept says this is going to be exempted as per rule number 2B. So first of all, we are discussing rule number 2B. You can see that this exemption is available only if employee shift out of section 115 BAC. That means he is in optional tax regime. Now, we are skipping note number 1, 2, 3, 4. We will discuss note number 1, 2, 3, 4 after rule number 2B provision. So what is rule number 2B? That is what we are going to discuss first, and then we will move on to note number 1, 2, 3, 4. So if you are going to travel, there would be generally 3 ways to travel. The public transport. First one, either the journey would be conducted by aircraft. That would be the first case. Second, in any other mode, there are 2 situations. Either that journey is going to be performed via train, or if the train does not exist, then there would be any other public transport system exists then. So that could be a bus, etc. And if no public transport is there, then we are going to find out the value as per point number B. So let me explain you this provision with the help of a diagram. So you will feel it very, very easy when we will understand this LTC provision with the diagram. So the concept says if you are getting an LTC, the question will explain whether it's by an aircraft that's going to be performed by aircraft, whether this is going to be performed by a train, or any other case. So if that is any other case, then either there would be any other public transport exist. That means Generally, we are talking about bus. And if no public transport exists, the place you want to travel, suppose there is no public transport exists, then the case going to be solved as per this concept. So first of all, the aircraft. If the journey has been performed by the aircraft, then you have to find out the exempted amount of that perquisite with the help of following 2 points. You have to find out these two values, and lower is going to be exempted. The first one is actual amount is spent. That would be given in question. You just need to remember these 2 points. The both information would be in question. You just need to exempt the lower of it. Actual amount is spent on that travel. It needs to be compared with air economy fare of national carrier by shortest route. So suppose in the example, it would be given like this, that employee receive LTC for suppose 40,000 rupees via aircraft traveling. The actual amount is spent is suppose 35,000. So he went for the travel from private aircraft. The private aircraft, that means private company aircraft, not his personal private aircraft. So the ticket value was 35,000. Suppose he went from Indigo, etc. Clear? But the national carrier economy fare was that also going to be given in question. Suppose that is 32,000. So in this example, how much amount we should consider it exempted? The actual amount spent would be 35,000. It's very simple to solve. And the economy class fare of national carrier we need to take for the purpose of comparison. So 32,000 is going to be exempted for this perquisite. And if 32,000 is exempted, then how much is going to be taxed? As I've told you, the universal formula to find out the taxable value is received minus exempt. So you have received 40,000, but the exemption would be 32,000. So 8,000 is going to be your taxable perquisite. So the good thing regarding this perquisite that everything would be in question. You just need to remember these 2 points, and the lower is going to be exempted, the balance is going to be taxed. In the same way, if the journey has been performed via train, then it says AC first class. AC first class train fare for that journey by shortest route, or actual amount spent, whichever is lower is going to be exempt and balance is going to be taxed. Suppose if any other public transport exists, in that situation you need to take first class deluxe class fare of that bus or that public transport. You need to take the first class deluxe class fare by shortest route, or again the same point, actual amount spent, whichever is lower is going to be exempted. So you can see in all these 3 provisions till now, one is actual amount spent and the other is depend what kind of LTC you have received. If it is via aircraft, you need to take the economy fare of national carrier and lower is going to be exempt. If it is via train, you need to take the AC first class train fare. If it is by other than train public transport, the first class deluxe class fare you need to take for the purpose of comparison. Everything would be given in the question. So just need to remember the provision. Suppose there is no public transport exists. Now this is interesting. Now it says you need to take AC first class. AC first class train fare for such distance. Because actually train is not available. That's why we fall in this point. But we know where we are going to travel. Suppose that is 300 kilometers away. So even actually train is not running, but we need to find out that if the train would be going in India for 300 kilometers, what is the AC first class train fare? So we need to take the AC first class train fare for such distance or actual amount spent. Again, the good news. The AC first class train fare for such distance also going to be given in the question. You just need to put it the value, compare it with the actual amount spent, and lower is going to be exempted. And the balance is going to be taxed. So technically, even you can see this perquisites having a complex diagram. But if you think logically, this is very, very easy. Because everything would be in the question. There is no calculation you need to do. There is no computation you need to do. The value would be there. Need to put in the formula, you will get the answer. Okay, so that was the LTC provision. Now the notes are very interesting and important also. The first note is what is the definition of family? Because the LTC is available for your family members. So you need to know who is covering under this definition. The note number 1 say, family means a spouse and children of individual. A spouse and children of individual. That would be the part of family. Spouse and children of the individual, whether dependent or independent. So you can take with yourself, the LTC is provided by your employer, would be for your spouse and children. And you can also take your parents, brother and sister, but if they are dependent upon you. So if parents, brother and sister is dependent upon you, then you can have the LTC exemption for these also. If they are independent, you cannot claim the LTC exemption for parents, brothers and sister. So first note was clear. Now note number 2. This is very interesting. And on this note number 2, I guess once or twice the question has been asked in the examination. The note says from 1st October 1998. This note is for children. That how many children we can take ourselves. How many our children we can take ourselves for the purpose of exemption. How many children exemption would be there. So the concept says from 1st October 98. Exemption shall be available only in respect of 2 children. But in case of children born before 1st October 98, this restriction is not applicable. Now, what exactly the meaning of this? Let me explain to you with the help of a diagram. So the provision regarding LTC exemption in case of children, the concept say that if any children born or take birth before 1st October, there is no limit. So suppose an employee whose children has taken birth before 1st October 98, suppose 4 child he have. So he can ask for exemption of all 4 childs. No restriction. But if children take birth on or after 1st October 98, then only maximum 2 children exemption you can claim. Maximum 2 children exemption you can claim. For example, an employee is having 3 child who has taken birth before 1st October 98, and suppose 4 childs take birth on or after 1st October 98. So can you tell me what is the total number of children he can take the exemption? In this situation, how many children exemption he can claim? Sridhar is saying 2. Anyone else? How many children deduction exemption can be claimed by employee? Tanisha is saying 5. Anyone else? Isha is saying 5. Visual is saying 5. Very good. So the correct answer is 5. Surinder also gave the correct answer. Akhila also, SK now also correct. Because there is no limit on children take birth before 1st October 98. So they can, 3 all, can take this exemption. But out of these 4, only 2 can take the exemption. So total exemption can be availed 5. If I'll change this example, 3 children before, and suppose now if one child takes birth on or after 1st October 98, then the answer would be automatically 4. Simple. But this was not kind of question which has been asked in the examination. This is too simple to solve from the point of view of C examination. There is some twist. And what is the twist? Twist in respect of twins. So suppose if twins takes birth, then what would be the situation? And that is very interesting. Again, it does not matter in case of child takes birth on or before 1st October 98. But in case of twins or thrice, etc. takes birth on or after 1st October 98, then what is the concept? The concept says, if twins takes birth, first, then the limit of 2 would be assumed as exhausted. So if twins or thrice takes birth first, that means on or after 1st October 98, single child did not takes birth, first twins or thrice takes birth. So even twins or thrice takes birth on or after 1st October 98, they will consider 2 directly 2. And they can have the exemption. Let me tell you what. Suppose on or after 1st October 98, 3 child, thrice births together. So pehle first lete hain twins. Twins takes birth. That means 2 child takes birth, and then 1 single child takes birth after. The provision says if twins takes birth prior to the single child birth, so we will not give exemption to single child now. Twins will consume the full exemption of 2 children. So they can take the exemption and this child cannot take the exemption. So in this case, on or after 1st October 98, only 2 child's exemption can be claimed. Suppose instead of twins, 3 children takes birth together. That means thrice. And after that, 1 single child takes birth. Again, he would not be considered. But the good news, the children, those are going to take birth together, will be always considered as maximum 2. And these actually number 3, but they all can 3 take the exemption. Even if 4 child takes birth together, all 4 would be eligible for the purpose of exemption. After any child, single child take birth, exemption cannot be taken. Suppose if I'll ask you that twins takes birth, and after that again twins takes birth. After 2 years again, twins takes birth. Then how many children exemption we can claim in respect of these children who has taken birth on or after 1st October 1998. Correct, Surinder? Surinder is saying 2. Exactly. The correct answer is 2. So once the twins has taken birth or thrice has taken birth, they all can have the exemption. But after that, even single child takes birth or twins takes birth, they cannot be eligible for the purpose of exemption. Understood? Now, what would be the reverse case? Suppose now this happened. Single child takes birth, and after that, twins takes birth. So initially single child takes birth, but after that twins takes birth. Now the provision is different. The provision says he or she would be eligible automatically because single child's allowed. And if twins birth after the birth of single child, they both would be eligible for the purpose of exemption, because this would be injustice that out of these two we only consider one because they have taken birth together. So we will be consider them both eligible for the purpose of exemption. So in this case, total 3 children can take the exemption benefit. So you need to see in the question whether single child takes birth before and after twins, that is beneficial for employee, because in this situation, you can claim exemption for higher number of children. Suppose if single child takes birth and after that thrice takes birth together, 3, all eligible. Total 4 exemption could be claimed. And if suppose one single child takes birth, after that one single child takes birth, then twins. So of course they are not eligible because 2 children limit has been achieved. So in the question you need to see if the twins takes birth before the birth of single child, the exemption could be available only to those twins or thrice, etc. Those takes birth together, and single child exemption cannot be available. But if single child takes birth before and after that twins takes birth, then single child as well as that twins, etc. can claim the exemption. Now you can see how interesting this is. So this is regarding the note we were discussing. From 1st October 1998, the exemption shall be available in respect of 2 children, but in case of children born before 1/10/98, this restriction is not applicable. Clear? The detail regarding twins we have discussed. Note number 3. The exemption under this section shall be available to an individual in respect of 2 journeys performed in a block of 4 calendar years, starting from 1986 calendar year. Now, note number 3 and 4 are interconnected. What these note number 3 and 4 wants to explain, let me tell you. The provision says, suppose you have got an employment in 2012. So in 2012, 13, 14, 15, your employer provide you LTC for every year. 1 LTC in each year. Clear? But the provision for exemption says your employer can provide you as much LTC as he wants. We do not have any restriction on it. But the income tax exemption is only available out of these 4 LTC. You can claim any 2 LTC. As per rule number 2B. Rule number 2B that was if you are performing via aircraft, train, etc. So that exemption you can claim only for 2 any LTC which has been provided you for a 4 years block. So suppose in these 4 years you only get 3 LTC. Again in that case you can exempt any 2 LTC. Any 2 LTC out of these, either 4 LTC or 3. Out of 4 years of block, whatever LTC or how many LTC you have received, that does not matter. But out of 4 years of block of LTC, you can take exemption of any 2 LTC. Now suppose what happened, out of these 2 LTC, employee only availed 1 LTC exemption. So he is spared with 1 extra LTC exemption. So out of these 4 year LTC, he only claimed 1 year LTC exemption. So now you have a benefit in the next 4 year of block. Again, you will get 4 LTC. So now general provision was you can only claim 2 LTC exemption out of these 4 LTC in a block. But if any employee only avail 1 LTC in these 4 year of block, then 1 extra exemption which he did not avail, 1 extra LTC exemption which he did not avail, he can claim in this year. So 1 LTC exemption relates to old plus 2 LTC exemption provision out of 4 block, he can claim. So maximum LTC exemption in any situation by any employee could be 3. General rule, it could be maximum 2. But if 1 LTC exemption is spare with that employee in last 4 block of year, then he can claim that 1 year exemption in the next 4 block of year. But the one condition is there. This spare exemption he needs to claim in the first year of next one. He needs to go for a travel and he can claim first balance year LTC exemption in first year, and out of these 3 years, he can maximum claim 2 LTC exemption. There would be a question in your mind, then what if he does not claim any LTC exemption, not avail any? Then he is having 2 exemption. But even if you have 2 exemption left, you can only carry forward 1. So even if you have left with 1 exemption, you can claim 1 exemption. Even if you have having 2 exemption left, you did not avail any LTC exemption. Even then, you can only carry 1 LTC exemption, and that you need to claim in the first year of 4 next block of year. So that was note number 3 and 4. Look. The exemption under this section shall be available in individual in respect of 2 journey performed in a block of 4 calendar year. Note number 4. Where such LTC is not availed by an individual during any block of 4 year, then exemption can be claimed in the first calendar year of the next block and only for in respect of 1 journey. So there are 3 important terms in note number 4. If you have any spare exemption of LTC, you can carry forward it and you have to use that in the first calendar year of next block and only in respect of 1 journey. Understood? Example has been given over here. An employee does not avail any LTC in block 18 till 21. So now he is having 2 LTC exemption, but he can only carry forward 1, and that one he needs to use in the first year of next block, that would be year 22. He is allowed to carry forward maximum 1 unavailed LTC to be used in the succeeding block of 22-25. Accordingly, if he avail LTC in April 25, the same will be treated as having availed in respect of the block 18-21. Therefore, he will be eligible for exemption in respect of that journey, and 2 more journey can be further availed in respect of the block of 20-25. So let me tell you, if in examination in MCQ optional question or true and false something is going to ask how many maximum exemption of LTC can be claimed, how many maximum LTC exemption can be claimed in a block of 4 calendar year, what would be the correct answer? The correct answer would be, of course, correct Sushmita, it would be 3. Correct Akhila, correct Isha, correct Mehak. It's not 2, it's 3. It would be 3 because maximum LTC in any situation, how many you can avail? So in extreme situation, you can claim 2 in respect of your 4 calendar year and 1 could be carried forward from back year. So that was the provision of LTC exemption. Now we are moving to medical facility perquisite exemption. So under income tax, whenever there is a situation regarding your health or life, whenever we talk about health and life, there would be benefit, there would be exemptions. So income tax technically is a very emotional act. So when there is provision for your health or life, they will provide you benefit. Benefit, that means they are going to provide you exemption or they are going to provide you less taxability. So that's why in case of medical provision, in case of life insurance provision, you will see income tax always provide you benefits. Let me see if there's any query on portal. No query on portal yet. Ketan is saying, sir, going on a travel is necessary to claim exemption. Without travel, can we avail it? Very good question. Ketan, we have gone through with rule number 2B. And in case of 2B, there was a point to claim exemption, actual amount spent. And you need to compare it with the aircraft value or train, etc. So your question is, if we are not going on travel, can we claim the exemption? So suppose if you are not going on travel, then what you are going to write it down in actual amount spent, that would be 0. Clear? If that would be 0, so that 0 is going to be the lowest. So exemption would be automatically 0. So the answer is no. If you are not going on travel, then you cannot claim the LTC exemption. The full amount of LTC would be automatically taxed, because if you will try to go with the LTC provision, what you will write in actual amount spent? 0. So automatically full LTC is going to be taxed. Clear? Chalo. Next, medical facility. Proviso to section 17(2), followings are exempt in the hands of employee. It says medical facility provided in a hospital, clinic, etc., maintained by employer. So suppose employee or his family member is going through any medical surgery, etc., in a hospital which has been maintained by employer. In that situation, if employer says whatever expenditure would be there, do not worry, we will pay that, or we will not ask you to pay. So if the hospital is maintained by employer, an employee is or his family member is in that hospital taking treatment, then no amount is going to be taxed. Whatever amount spent by employer is 100% exempt. You can see how much income tax emotional. The second exemption for medical. Suppose the hospital is not maintained by employer. Generally, there would be cases in which hospital is not maintained by employer. Suppose an employee is working in a school and he's going through some medical emergency, and that employer, the school organization, says you can go and have the treatment. We are going to pay for it. So generally, first case would be only in that situation when you are working in any hospital automatically. So the hospital is maintained by them. In any other case, what would be the treatment? So if the reimbursement of expenses incurred by employee, if the employer is reimbursed the expenses incurred by employee on medical treatment in any hospital maintained by government, local authority, or approved hospital by government. So if you are in any government hospital, an employer is paying your expenditure, again, full exemption, nothing is going to be taxed. So hospital is maintained by employer, no taxability. Hospital approved maintained by government, no taxability. In respect of prescribed diseases in any hospital approved by chief commissioner or principal chief commissioner, again, that is going to be exempt. This is for prescribed disease. So even hospital is not maintained by government, but if it is approved by commissioner or principal chief commissioner, then in case of prescribed disease treatment, no amount is chargeable. Whatever paid by employer is exempted. The taxability of perquisite, the meaning of perquisite is exactly that: personal expenditure paid by your employer. So you can see in a medical expenditure, that is your personal expenditure. An employer is paying, so that is a perquisite, but that is exempted perquisite if hospital maintained by employer, by government, a specified disease, and approved hospital by commissioner. Next is any in respect of any illness relating to COVID-19 subject to the condition notified by the central government. So that was medical treatment in hospital maintained by employer, by government, a specified disease approved by commissioner, COVID-19 expenditure reimbursed by employer. It's not yet completed. Now you can see premium paid to effect on insurance of health of employees. So I have told you, when life and health comes, income tax provide you benefit. So if your employer is paying health insurance policy premium for employee, then whatever premium employer is paying, because again, it's a personal expenditure paid by employer, it's a perquisite. But again, it's related to your health. Income tax is an emotional act, so they are providing you exemption. Any premium paid by employer in relation to employee to effect an insurance on the health of such employee. However, any such scheme should be approved by the government, etc. So health insurance premium also exempted. Now, reimbursement of premium paid to affect an insurance on the health of employee or the family of an employee. So even if the health insurance premium has been paid for family member of employee, that is going to be exempt. Fifth is very interesting. This point we have not covered yet in exemption because this is going to be taxed. Reimbursement of expenses. Now suppose employee is suffering from any disease. He wants the treatment. Clear? Employers say, okay, you can have the treatment. We are going to pay. We are going to reimburse. Hospital is not maintained by employer. Employee is not going in any government hospital. A specified disease, but not approved hospital. So suppose if there is any case which does not cover as above points, that means if employee is taking treatment in any private hospital for other than a specified disease or not approved by commissioner, in that case, the full amount is going to be taxed. No exemption is there. So incurred by employee on medical treatment by the employee on medical treatment from any private doctor, or we can say private hospital. So that is going to be full taxable. So if that private hospital is approved by commissioner and a specified disease treatment is there, that is going to be exempt. So if it is general disease or not approved by commissioner, then that private hospital expenditure which has been reimbursed by the employer is going to be taxed, completely taxed. Abhi, it's not completed yet. Now a new situation arises. Suppose employees say, I would not like to get the treatment. I would not like to have treatment in India. I need to take the treatment outside India in some hospital, etc. An employer agrees, okay, you can go and have the treatment and we are going to pay for it. Now that would be an interesting situation because in that situation, also exemption is there. You can see income taxes, how much emotional that generally they do not provide you exemption if the expenditure is outside. Like in case of LTC, LTC should be in India, then they provide exemption. But in case of medical emergency, they say, okay, we will provide you exemption. And what exemption for which expenditure? Any expenditure. Now, suppose if someone is the patient and he wants to have a treatment outside India, then the major expenditure would only not the treatment. There would be other major expenditure also. The one major expenditure would be for travel. The second major expenditure was stay there. And the third major expenditure would be treatment. Employers say, do not worry, we will pay everything. Your travel, your stay and treatment. If employer is not paying, suppose employer say, no, we are not paying traveling expenditure, you need to bear yourself. In that case, that is not perquisite. So in salary, we will, because that is employee expenditure, we are going to tax something which is his expenditure but paid by someone else. Okay. So there will be three major expenditure: the travel, the stay, and the treatment. Now let me ask you a question. If patient, is it possible that patient is going to be travel alone outside India for the purpose of treatment? Practically not possible. So generally they provide this travel exemption for patient and attendant. Only one attendant is permitted. So employer, if paying for patient travel as well as attendant, one attendant patient, attendant of patient is there, and if employer is paying for both of them, the perquisite would be completely exempted. So how practically and how emotionally income tax is providing you exemption in case of health, you can see that. Again, the stay expenditure, patient and attendant, both allowed. Now the treatment expenditure, ये किसका होगा? Patient and attendant both, or only patient, or only attendant? Tell me. Ketan has asked me that if we were not going on travel, can we claim the exemption? And I have told him, no, you cannot claim the exemption. Now he is saying, can we put actual amount as a fake one? Look, now you are talking which is called evasion of tax. And this is called fraud. So if you put those fake things and if you have been caught, there would be tax and penalty, etc. So you cannot write it down in the examination that we can upload fake bill, etc. So this question is not relevant, of course, Ketan. Of course not. The correct answer, of course. Both. Okay, Mag wants the treatment for both. Very bad. Very bad. Okay. She knows the correct answer. She's just writing like both. So of course the treatment is only for patient. So travel expenditure for both exempt, stay expenditure for both exempt, and travel expenditure of only patient is going to be exempted under this point. So you can see medical treatment outside India is going to be exempt. Travel and stay abroad of employee and one attendant. That should be patient or one attendant. Okay. But there is a very interesting limit. Till now it is simple. We have gone through it. We have seen, okay, this amount is going to be exempted. But for the purpose of this foreign expenditure on medical treatment, there is a condition has been, or you can say a restriction has been made, that these exemption you can claim. Out of these three, this would remain exempt, this would remain exempt. But in case of travel, you have to check a condition. If the gross total income, GTI, if the gross total income of the employee before including such expenditure of travel, if it exceed 8 lakh rupees. Now let me tell you, that was a specified limit. The notes you must have downloaded. In those notes, there would be only, write it down, this exceeded prescribed amount. Now the amount has been prescribed and that is 8 lakh rupees. So if it is not mentioned in the notes, you can write it down. It's 8 lakh. So suppose if the employee gross total income exceeded 8 lakh rupees, in that case, the travel exemption amount, listen very carefully, the amount you exempted in case of travel is going to be taxed. And if gross total income does not exceed 8 lakh, then travel, stay, treatment, all three expenditure will remain exempted. But if GTI exceeding 8 lakh, then travel expenditure is going to be taxed. Stay and treatment expenditure will still remain exempt. So in the question, you need to see that if the GTI exceeding 8 lakh, in that situation, the travel expenditure you need to add back. Let me show you how. Suppose the treatment is outside India. Expenditure on travel is given in question 2 lakh rupees. Expenditure on treatment, suppose 3 lakh rupees. expenditure on stay, suppose 4 lakh rupees. There could be RBI limit also could be given in the question. RBI allowed full 2 lakh rupees for travel. RBI allowed 2.5 lakh out of treatment, and from stay, RBI allowed 3.5 lakh. So these would remain exempted. These would be given in the question. So if there is anything which has been given that in case of travel, treatment, stay, RBI permitted this much of exemption, then this will remain your exemption. So that means the taxable value would be, in this case, 0, 50,000 and 50,000. Now we need to see the GTI. So now under salary head, after considering this 1 lakh taxable, because these need to be included in medical facility, the basic salary, etc., allowances, other perquisite, etc., and including these 1 lakh. Suppose your net salary is 7 lakh. And your other income also given, like interest income, etc., and suppose that is 2 lakh. Suppose the question says this information. So now you can see your GTI will be 9 lakh. So if GTI exceed 8 lakh, now what do we need to do? This 2 lakh exemption would be gone. Now we have to tax this 2 lakh rupees. Technically in this 7 lakh. So now salary would be 9 and total GTI would be now 11 lakh. Suppose this is in place of 7, it was suppose 5 lakh. 2 lakh rupees interest. So now the income or GTI is 7 lakh, which is less than 8 lakh. So if GTI is less than 8 lakh, in that situation, travel exemption would remain the same, and that would be your answer. So in the question, you need to see after the treatment of medical facility, whatever is the taxable amount, you will consider it as we have considered in this situation, 1 lakh including in this 7 or 5. After that, you need to check the GTI. If the GTI exceeding 8 lakh, the travel amount which has been exempted earlier is going to be taxed in the salary again. Understood? So this you need to keep in your mind when you are solving a question of medical facility. Now, what is the definition of? You can see the perquisite element in respect of expenditure on medical treatment and stay abroad will exempt only to the extent permitted by the RBI. Medical facility, etc., to employee or his family member. So who is included in the family member? You can go through with the definition. Health insurance policy was exempt. Now accidental insurance policy, if paid by employer for an employee, that is also exempt. So if an employer takes personal accident insurance policy on the life of employee and pays the insurance premium, no immediate benefit would become payable and benefit will accrue at a future date only if certain events takes place. So the premium so paid will not constitute a taxable perquisite in the employee's hand. Now there are some perquisites. Those are only going to be taxed in the hands of a specified employee. Let me tell you what kind of perquisite it is. So perquisite generally means personal expenditure, paid by employer. So let me tell you a general rule. We can call it obligation also. Obligation of employee met by employer. Obligation means the liability of someone is paid by someone else. So obligation means employee liability, personal liability, which has been paid by employer. Like suppose employee is residing in his house and employer say the electricity bill of your house, we will reimburse. So technically, who is having the legal liability to pay the electricity bill? Who is the consumer, the employee? But employers say we will pay your electricity bill. So that would be called a perquisite, or we can say it is an obligation of employee met by employer. So generally, this obligation of employee met by employer is of two types. Obligation of employee met by employer. Generally, in a practical sense, very simple thing to understand, it would be two types. Either the bill will be in the name of employer. Like in electricity, if I am working in some organization and I am living in my house, so electricity bill would be in my name. And if employer decided to pay that electricity bill, that would be this first case. That if any bill in the name of employee and that has been paid by employer, that is a kind of a perquisite. Or suppose I ask to my employer that I need a cook for my house. Employer say, okay, you can have a cook. You can find a cook, employ it yourself, and the salary is we are going to pay. I asked for employer that I need a driver. He said, you go and find a driver, appoint it, and we will pay the salary of it. So that is again, if I am appointing someone, that means the bill should be in my name. So if that kind of payment has been made by employer, so these kind of perquisite is taxable for all employees, whether a specified employee or non-specified employee. I should write it down on a separate sheet so you would be able to understand. So we are discussing the kinds of obligation or perquisite. Obligation of employee met by employer. So perquisite is an obligation, but there are two kinds of perquisite. That's why we are discussing this. Perquisite and obligation, same thing. So there would be a one situation in which bill in the name of employee or person appointed by employee, as driver appointed by me, etc. But the payment made by employer. So if this kind of obligation or perquisite has been given in the question, in which bill is in the name of employee or person appointed by employee but paid by employer, so this kind of perquisite is taxable for all employees, whether you are a specified employee, whether you are non-specified employee. So what is specified employee, non-specified employee? This definition will come after this provision, obligation of employee met by employer. And now suppose there is a kind of perquisite in which bill is in the name of employer. Now suppose I am living in a house and employer has provided me a cook himself. I asked them that I need a driver. They appointed a person as a driver and they send them for my services. So if that kind of obligation is there in which bill in the name of employer, suppose the electricity connection has been taken by employer in his name. So automatically bill would be in his name, but I am using that electricity in the house. So if that kind of perquisite has been provided in which bill is in the name of employer or person appointed by employer and of course paid by employer, That is a rare kind of perquisite. Bill in the name of employer, person appointed by employer, of course paid by whom? Employer always. That's why it's a perquisite. If employee is paying, then it cannot be perquisite. It would be an expenditure, no treatment in salary act. So if this kind of perquisite is there, which is not going to be provided to all employee, this is only for a special category of employee. That's why it's taxable for a specified employee. And if this kind of perquisite is provided to non-specified employee, exempted. Exempted for non-specified employee. Understood? So that is the provision we are discussing over there. And now we need to understand that what is specified employee and what is not specified employee. Ketan is asking, where can we download the chart which was shown last class? The chart is going to be uploaded today, so you may download it by tomorrow. Okay. I have not uploaded chart intentionally because if chart would be there, maybe you are not going through with the detailed provision. Because chart is self-explanatory, so you may not go for the detailed provision. That's why I want that you should go with detailed provision, revise them, and then you should move on to the charts. So these are the perquisite. Any monetary obligation of the employee which is discharged by employer is perquisite in the hands of all employees. However, sometime instead of discharging employee's obligation, employer provide perquisite in the form of facility to employee. So generally what happen, they ask you to always that take this facility yourself, we will reimburse it. But if they are providing you directly cook, electricity bill, etc., so that would be a special case. Such perquisites are taxable only in the hands of specified employees. Understood? They are kind of perk like sweeper, gardener, facility of gas, electricity, concessional ticket, use of motor car, pre-educational facility. So these are going to be discussed one by one. But before that, might be now you are thinking, how we will identify a specified employee or a non-specified employee? So now this is the definition of specified employee. So you will understand what is a specified employee. Sayyid Adil Farad, sir, where in the book the bill name and employee name is taxable is mentioned? I am not able to find it. You will not find it because that is the interpretation I have told you to make you understand what is the technical language is saying. This point you will find in your study. This is explaining this. Any monetary obligation of employee which is discharged by employer. Discharged by employer means that expenditure must be in the name of employee. I have just made the chart to make you understand in simple language. This is the technical language that if employer discharging your liability means when bill or person appointed by you. And the second line you can say, however, sometime instead of discharging employee's obligation, employer provide perquisite. So that means in this case, there is no bill in the name of employee because the employer himself is providing that benefit to you. Such perquisites are taxable in the hands of a specified employee. If I'll not prepare that bill provision, the diagram I have just prepared, you will not be able to get this language that what exactly they are trying to tell you. So that bill in the name of employee, person appointed by employee, that I have made this language in simple format to make you understand. You will not find it in your study material anywhere. You will find in study this paragraph, what we have just discussed. Okay. Chalo bhai. What is the meaning of a specified employee? If any employee fulfill any of these three conditions, anyone, he will be called a specified employee. Means employee who satisfy any one of the following condition. Employee and director of a company. Now you can see he is a big employee. He is a big person. He's a director as well as an employee. That's why employer providing bill in the name of himself or directly providing gardener, sweeper, etc. directly, because he's a special category of employee. Are all employees director of a company, or it's a rare thing? Think about it. Are all employees are also director of company, or it's a rare employee who is going to also director of a company? Of course, there would be very few or very rare cases in which a director is also a employee of the company. So that is a special employee. That's why the name says specified employee. So if a director becomes the employee, so the employer can provide those kind of perquisite where bill in the name of employer, where a person directly provided you by the employer. You understand the logic behind it? You can see it's a powerful employee we are talking about. In the second condition, employee who has substantial interest in the company. Substantial interest we have discussed, more than or equal to 20% voting power. Are all employees having 20% equity share of a company? No, very, very rare quality. So if there is any employee who is having 20% share capital of the company, he is a special one. And the third condition, employee whose monetary salary is exceeding prescribed amount. Again, the prescribed amount might not be mentioned in the notes you downloaded. You can write it down. It has been specified now 4 lakh rupees during the previous year. So any employee whose monetary salary is exceeding 4 lakh will also be considered as a specified employee. So in comparison to point number 1 or 2, you will feel this third is 4 lakh rupees salary is a very, very less powerful condition. And in my opinion, 90% and more employee would be covered as a specified employee due to this condition number 3, because we need to fulfill only one condition. So in majority question, whatever you are going to solve in the examination or your study material, you can see these would be a specified employee question. Why? Because in all the cases, the salary would be more than 4 lakh rupees in a year. Suppose if a salary is 40,000 per month, that means your monetary salary would be more than 4 lakh. How do you need to calculate the monetary salary? Here is the format. You can see basic salary, all monetary payments as we have discussed in the ideal format. In the starting, M, all M you need to consider, bonus, commission, etc. Less deductions as applicable. This amount, if exceeding 4 lakh rupees, he would be an specified employee. And let me tell you, if the basic salary is 50,000 per month or 40,000 per month or 45,000 per month, he would be automatically a specified employee. Now, valuation of perquisite. As I have told you in the starting of today's class, that there would be perquisite, 2 perquisite. Those we can say, yes, they are complicated. One is rent-free house and the other is car facility. So now those 2 perquisites we are going to discuss one by one. And you can see these perquisites we need to discuss in this topic: rent-free house, motor car, other automotive, valuation of benefit of provision of domestic servant, electricity, water, etc. So first and second is at most important and little complicated also. So first come first, and that is rent-free house perquisite or valuation of residential accommodation. Calculation of unfurnished accommodation provided to an employee. So if you are working in any organization for the purpose of your residence, either employer can provide you an allowance or a perquisite. What was the name of that allowance we have gone through which could be provided for the purpose of your accommodation? I guess in the first session we have gone through with that allowance. Akhila is saying HRA, correct. House rent allowance. Isha also, of course, HRA, house rent allowance. But in case of house rent allowance, I have told you that employee is going to receive a certain amount from employer every month. And out of that amount or from that amount, he will decide that how much or which house he wants to use as a rental accommodation. How much rent out of that HRA he wants to pay. He can pay less, he can pay more. He can stay anywhere with their relative, etc., and not going to pay anything. So that is allowance. But now this is perquisite. Now, perquisite, in case of perquisite, employer is not going to provide you anything in monetary terms. If you need a residential accommodation, they will provide you a flat, a house, etc. And they will ask you that you can go there and live freely. No need to pay anything. So that kind of perquisite is treated as rent-free accommodation. We call it rent-free house. Now there would be two situations. That house could be unfurnished or furnished. Unfurnished means only building has been provided, flat, etc. You need to bring your furniture, AC, etc., home appliances, etc., etc. But other case, there could be a situation where employer provide you the building as well as the furniture. So that's we call furnished accommodation. So there could be unfurnished accommodation, there could be furnished accommodation. So what is the treatment? How we will find out the taxability, that we are going to see in this rent-free house provision. Till now, if we have seen, we generally find out the exempted amount. And then we find out the taxable after deducting exempted from received amount. But in these cases, what we are going to discuss, generally we will find out the taxable amount directly, not exempted amount. In case of perquisite, we generally find out direct taxable value. And you will see in these all cases, we are going to find out the taxable value, not the exempted value. In case of HRA, etc., we need to find out the exempted value. In case of compensation, we need to find out the exempted value. But in case of perquisite, we have to find out the taxable value. So first come first, case number 1, 2, 3, you can see this is the perquisite we are talking about till case number 5. So there are 5 cases of rent-free house. So as I have told you, it is a little complicated. Now see, when we will go through with this, at the end, whether you will feel it complicated or you will feel it that again, this is all based on logic and not that complicated. Now, rent-free house provision, we are going to discuss. So there could be two situations. Chalo, house banate. Acha sa. Yeah. So there could be two situations. Whether it would be a unfurnished accommodation. If it is unfurnished, that means we just need to tax the building taxability value. We need to find out the building taxable value as a perquisite. Or it could be a furnished accommodation. So in case of furnished, that means the building taxable value, so we have to find out. Same as case of unfurnished. We just need to add furniture taxable value. Furniture includes all home appliances, etc. So you can see in both cases, building taxability, so we have to find out. One additional work in case of furniture. Clear? Now, if we'll go through with unfurnished accommodation case, there would be two situations. Either that would be a government employee. In case of government employee, the taxable value, as I've told you, in case of perquisite, generally we are going to find out the taxable value. The taxable value would be the license fees. As government prescribed. The good news that would be given in the question. The license fees would be in the question So you need not to calculate anything. The license fees would be in the question. That is going to be directly taxed. Clear? So pray to the God that in the examination they will give you a question of government employee. But let me tell you, God is not going to listen because they will provide you other employee provision. If that is other than government employee. Clear? That was first case. Now this is second case. Total 5 cases are there. This is going to be third case. After this, 2 more rent-free house cases. Now, if that is other than other employee, then again there would be 2 situations. And it's very practical, very logical. Do not think how complicated it is. Just think about how logical it is. The more you will try to just learn without logic, it would become difficult. Just be logical. In case of other employee, the rent-free house, the building which has been provided to the employee, either would be owned by employer. There are 2 situations. Either this building would be owned by employer or on lease or on rent. You are working in an organization. Employer asks you that we will provide you rent-free house. Go to flat number 102, whatever it is, and you can reside there. Now that flat either would be owned by the company. Company is the legal owner. Or maybe employer has or the company has taken that flat on rent. In both cases, you need not to pay anything. But there would be a case, either flat is owned by employer, the taxable value would be different. If the flat is on rent, the taxable value would be different. So in the question, you need to see whether it's owned by employer or taken by employer on lease or on rent. If the question is silent, assume it is owned by employer. Now, if it is owned by employer, there would be 3 situations. The place in which you reside, the city in which you reside, either having a population more than 40 lakh. If you are living in a city, if you are working in a city in which rent-free house has been provided, the population of that city either would be more than 40 lakh. If it is more than 40 lakh, the taxable value would be 10% of salary. Population would be given in the question, but suppose if the city has been mentioned like Delhi, Mumbai, Calcutta, Chennai, Bangalore, Hyderabad, so in that case, population even if not given, you can assume the populations are in crore, so automatically this case would be applicable. Either the population will be between 15 to 40 lakh. In that case, taxable value would be 7.5% of salary. Third case, other. That means population is up to 15 lakh, logically, if you understand, up to 15 lakh. If more than 15, up to 40 would be over here, then up to 15 lakh would be here. And in that case, taxable value would be 5% of salary. If that property was on rent or lease by employer, in that case, the taxable value would be 10% of salary or rent paid by employer, whichever is lower. Generally, whichever is lower is exempted, but this is taxable value. The good news, when the property is on rent, then population does not matter. Always you need to take 10% of salary or rent paid by employer, which would be given in the question. A very important information, please remember. If in the question rent paid is given, rent paid, only in that situation we will assume it as this case. To confuse you, there would be a cases in which instead of rent paid, they will write it down that rental value of that flat, fair market rent of that flat is so much. So do not get confused that if the rental value, fair market rent, fair rental value, etc. has been given. So do not consider it as this case. That would fall in owned by employer. Until otherwise, rent paid word has been written over there. Rent paid word has been written. You will not solve it as property on lease or rent. You will solve it as per owned by employer. If the rent paid word has been written, then only you will solve it as per property on lease or rent. So that was case number 2. Anything difficult till now? Anything difficult, students, till now in this rent-free house perquisite? Look, it's 10%, 7.5 and 5%. What is difficult in this? That means it is not yet end. Till now, so I can say HR is more difficult in this. Till now, fine. In this, so we do not need to anything. We just need to take 10, 7.5 and 5, and the population would be given in the question. So that would be the unfurnished rent-free house taxable value. But when we are going to solve furnished taxable value, in this situation, what we need to do? First of all, so we have to calculate taxable value of unfurnished accommodation. That would be again same as we have find it out. Whether it's in government employee, then we will take the license fees. That would be taxable value. If that is other employee, then we will take taxable value accordingly. 10%, 7.5, 5%, etc. So this is, so we need to solve whether it's unfurnished or furnished. The building provision, so we need to solve. As the case may be, the value would be here. The new point is this. Whatever furniture has been provided to you, for that, what would be the taxable value? So in case of furniture which has been provided to you with the house, the taxable value would be 10% per annum of original cost of that furniture, AC, etc., whatever has been provided to you, or rent paid. Now tell me, what should be over here? Higher or lower? What do you think would be higher or lower? In case of furniture, if furniture has been provided by employer, either we need to take 10% per annum of original cost or rent paid. So what should be there? Higher or lower in your opinion? Akhila is saying lower. Sushmita is saying lower. Anyone else? SK Inam saying higher. Ashok Chintaman is saying higher. Visual higher. Omkar lower. Sridhar lower. Anyone else? Suppose you are an employer and you want to provide your employee furniture. Suppose air conditioner. You want to provide your employee an air conditioner. So either that air condition would be in the same way, in case of rent-free house, we take these are two mutually exclusive situations. Either that property would be owned by employer or it would be on rent. That is also an asset. In the same way, any asset either would be owned by you or on rent. So if it is owned by employer, then this case would be applicable 10% per annum of original cost. If it is taken on rent by employer, then we will take the rent paid. So that would not be the lower higher, it would be as the case. They are both mutually exclusive. If you are having your phone with yourself, either you are the owner or you have taken this phone on rent. How it's possible that it is you are owner also and you are taking on rent also? So in house you are living, either you are the owner of that house or you are a tenant. How it's possible you could be both? So in case of furniture, if it has been written it's owned by employer, then 10% per annum of original cost of furniture need to be added back in this house value. And if it has been written that the furniture is also on rent and provided by employer to you, in that case, furniture charges or rental charges would be there in the question. That you are going to add. So after adding that, that would be the taxable value of furnished house. Still, it's not difficult till now. In case of furniture, in case of this salary chapter, it's a universal rule. If any asset has been provided by the employer to you, which is movable, house is immovable, which is movable, any movable asset provided by you, by the employer, 10% per annum or rent paid, as the case may be, this case will continue. In case of car perquisite also, car is a movable asset. So if provided by employer, you will see the taxable value in one case would be 10% of cost or rent, as the case may be. There would be case of other asset also movable. So all when there is a movable asset provided by employer, then it will always 10% per annum of original cost, not WDV, purchase price, original cost or rent paid, as the case may be. Don't imagine that lower or higher in this situation. If you will see in this whole diagram, is there something we do not know till now or everything is clear? Is there something you need to ask me? There would be one thing you need to ask me, which is not clear yet. What it is? Can you identify that? The most important point in this whole diagram is this salary. What is the meaning of salary? Is it gratuity C case? Is it something else? So the main concept of rent-free house is depend upon the meaning of salary. If in a question you are able to find out the correct salary for the purpose of rent-free house, you are going to solve rent-free house taxable calculation like this, like a snap. The main problem is calculation of salary, or you need to calculate it. So the whole computation part is on calculation of salary. Because after that, it's 10%, 7.5, 5%, or rent paid or 10%. Even in case of furniture, it's very simple. 10% of cost, that would be given in question. So the main concept and the main work is to identify the correct salary in case of rent-free house. And that is going to be after the break. So we will discuss what is the meaning of salary after the break. So is there any query, student? You can ask me before the break. Then when we will resume, then we will see the definition of salary in this case. The next episode of in which we will see what is the meaning of salary, suspense, would be revealed after the 10 minutes short break. So I guess there is no query. Ashok sir, can we take a short break? etc. So now we are continuing, and the last time before the break we were discussing the provision of rent-free house in which we have discussed the taxability percentage, etc. But the most important point was salary. What is the meaning of salary in case of rent-free house? And let me tell you, this salary is different from all the salary we have gone through. We have gone through the salary meaning of gratuity B case, in which there was basic salary and all kind of dearness allowance included. We have gone through gratuity C case, which is basic salary, DA as per terms of employment, fund provision, RPF. Up to 12% of salary was exempt. So exactly the same salary was there. So this is different. We have also gone through a salary that is monetary salary for the purpose of specified employee. It is specified employee monetary salary up to 8 lakh rupees. So we have seen the monetary salary calculation in which we take basic salary and all other monetary payments, all other allowances, etc. Whether allowances that's DS per terms or non-terms, all kind of monetary payment you have to add back. And then you need to deduct the standard deduction, professional tax deduction, entertainment allowance. But this salary, what we are going to discuss, is different from all of these. It is more similar to monetary salary, which is for non-specified and specified employee comparison. So if we want to relate it, that for which salary it's more related to monetary salary. If in the calculation of monetary salary for specified employee, if you will remove the deduction part, standard deduction, etc., you need not to consider. And you include all monetary payments, but DA only that part which is for retirement benefit. That will become the salary for rent-free house. We have in the provision also. Let's go through the provision. So this is salary provision, case 1, that is if just a second. So case 1, in case of central or state government employee, we have seen in case of unfurnished accommodation, license fee. Case 2, either house is owned by employer, own or rent. If population is more than 40 lakh, 10% of salary during the period house is occupied. Of course, if is rent-free house has been provided for 7 months, then we will take the 7-month salary 10%. If the population is more than 15 up to 40, 7.5%. Other city, that means it's up to 15 lakh, it's 5%. Rental case, always same, 10% of salary during the period or rent paid, whichever is lower, 10% or lower. Now, definition of salary is very important, and it says salary includes all monetary payments. But in case of dearness allowance, only that part which is for retirement benefits need to be taken. And you cannot take advance salary and arrear of salary also. So if I'll tell you what we can consider in the salary definition is basic salary, all monetary payments, allowance, DA, all other allowance would be included, but DA only terms of employment. That would be my monetary salary, and we cannot consider advance salary or arrear of salary also. We can take only basic salary. Because advance and arrear of salary does not belong to that duration in which house is occupied. Advance is for future, arrear is retrospective. So the salary which is due during the year, we need to take that. That's why note number 2 explain it. Salary to be commuted on due basis for the period for which accommodation is occupied by the employee. And due basis salary is only basic salary. So now case number 3, the value of furnished house. We have already gone through it. In case of furniture, if owned by employer, we will take 10% per annum. If hired, actual hiring charge. Case number 4 and 5, now we need to discuss for the purpose of rent-free house. Now, rent-free house is a kind of a accommodation which is provided by the employer to an employee. When the employer provides you a free rental accommodation, but there could be a situation in case of transfer of job. Suppose you were working in Delhi and a rent-free house has been provided in Delhi. Now your job has been shifted from Delhi to Lucknow. And in Lucknow also, employers say that we will provide you a rent-free house. So you went to the Lucknow for the purpose of joining. But it is not mandatory or practically possible that as soon as you are going to join the job in Lucknow or another city, you will instantly get a rent-free house. So there could be a situation in which employer will say, we will provide you a rent-free house after 10 days, or maybe 20 days, or maybe after 1 month, depending upon searching of property, etc. So there could be a situation when you will have this temporary rent-free house. Technically, I call it a temporary rent-free house in case of job transfer. So for that 15, 20, 25 days, employer will ask you to stay in a hotel, lodge, guest house, etc. And of course, employer is going to pay for it. If employer is not going to pay for it, that cannot be a perquisite. If you are going to expend it at your own, there is no reimbursement involved. That cannot be a perquisite. So when employer asks you to stay in any hotel, lodge, guest house for some temporary purpose, that is called case number 4. Value of accommodation provided in a hotel. In a hotel, taxable value will be minimum of following. The first is 24% of salary paid or payable for the year. So in normal case, it was 10%. But if it is an hotel accommodation case, in that situation, you need to take 24% of salary as taxable value for rent-free house, 24% of salary, but that 24% salary for in proportionate of number of days for the time you have occupied in hotel, etc. Suppose you are in that hotel or guest house for 20 days. So how we will calculate 24% of salary? Whatever is your salary amount for the whole year. The salary definition is same. All monetary except DAS per terms, except arrear and advance. So whatever would be your full year salary, monetary salary, take the 24% of it and then find it out the in proportionate number of days. That means 20 upon 365. So the full year salary as per monetary payment into 24% into number of days. Stay upon 365. So that's why you are going to find out the taxable value in case of accommodation provided in a hotel by government or other cases. And you need to compare this value to actual charges paid to hotel. Your employer must have paid actual rental charges to hotel, and whichever is lower is going to be your taxable value. So 20 days actual charges paid to hotel and 20 days value as per point number 1, 24%. Lower would be your taxable value. But there is some exception also. If the number of stay in that hotel is not exceeding 15 days. If number of stay in hotel is 15, 14, 10 days. After 10, 15 days, you have been provided with a rent-free house. So up to 15 days, if the hotel accommodation has been provided, that is non-taxable. If it is 16 days, then we will take the full 16 days value, not exceeding 15 days 1 day value. So in case of 20 days, we need to take 20 days value, not exceeding 15, 5 days. So up to 15 days, if rental accommodation is provided in a hotel, no taxable exemption. But if it is more than 15 days, then you need to calculate it. However, nothing will be taxable if following condition fulfilled. Accommodation is provided for a period not exceeding 15 days and due to transfer of job. The clarification says, firstly, calculate 24% of salary for whole year and then calculate the period for which he is occupied or hotel is occupied, proportionate on the number of days. That was case number 4. So we have gone through with 4 cases of rent-free house. First one was unfurnished, जिसमें first था government, second था other cases, third was furnished case, fourth was hotel accommodation in case of job transfer, and now fifth one is the last case of rent-free. In case of job transfer, hotel provision is this. But suppose if you are going temporary for attending any meeting, you working in Delhi, an employer send you for a 10 days meeting to attend in Mumbai. After that, you will come back to Delhi. So for 10 days, if you stay in a hotel, then this provision would not apply because it's clearly said that should be the time of job transfer. But if you travel for some days for some meeting, training, etc., then this rent-free house provision would not applicable. For that, there's a separate perquisite provision that we will go through later in this chapter. So please remember, if hotel accommodation due to job transfer, that means where now you are staying in which hotel, in that place you will be allotted a rent-free house because job has been transferred. Then case 4 applicable. But if no job transfer, just a meeting or attending some course, etc., you have been transferred for some number of days by employer, then this rent-free house provision would not apply. Now case number 5. What is case number 5? There is no new provision. As you have seen in case number 1, government license fees. Case number 2, it was 10%, 7.55%. So new provision was there, percentage was there. In furnished case also new concept came because of furniture. You have to take 10% of original cost or rent paid. In fourth case also we have gone through with new provision, 24% of salary, 15 days, then no taxability, etc. But in fifth case is nothing new. It's just a new situation. Nothing is new. What case 5 is trying to tell you? Case number 5 is saying that suppose if your job has been transferred, you are working in Delhi, you are having a rent-free house, you are living in that rent-free house with your family, with your spouse and kids. Now your job has been transferred to suppose Lucknow. You went to the Lucknow and a new rent-free house has been provided to you in Lucknow also. So there could be circumstances when an employee is having 2 rent-free houses simultaneously. Why? Because suppose when the job has been transferred, his family cannot be shifted instantly. Kids is having examination in Delhi. So he needs to shift to Lucknow for the purpose of employment. But his family cannot leave the old rent-free house for some days or some months because shifting is not that easy. Even if there is no such examination, etc., there would be a possibility that he could say that I am going to shift into Lucknow. My family will come after 1 month, 2 months. So till that duration, he might having a rent-free house in Lucknow and his family is occupied a rent-free house of the same employer in Delhi. So there could be practically possible that an employee is having more than 1 rent-free house simultaneously. In that situation, what will happen? That is explained by case number 5. So in case number 5, there is no new concept is there that the taxability percentage will change. No. It says very simple thing. That if your job has been transferred and due to that transfer, you are having 2 rent-free houses simultaneously. Then how it will work? Then how we need to calculate? So the provision says one would be suppose in Delhi. You are occupying Delhi rent-free house and the job transfer now in Lucknow. So you are having 2 rent-free house. Now the concept says for the first 90 days, suppose You are working from 1st April 2025 in Delhi rent-free house, and on 1st of August, your job has been transferred to Lucknow and you got a rent-free house. So technically from August, you are having two rent-free house. April, May, June, July. For 4 months, you are having only Delhi rent-free house. So there is no problem. You need to calculate the rent-free house calculation for 4 months accordingly, whether it's on let out or rent, whatever it is. The problem will arise from August and you vacate Delhi rent-free house. Suppose in January 2026, on 1st January, you vacate Delhi rent-free house. So from August till December, you are having August, September, October, November, December. That means for 5 months, you are having two rent-free house. And of course, from January onwards till March, you are only having Lucknow rent-free house for 3 months. So this 3 months calculation will be normal. According to Lucknow information, the salary information, this 4 months calculation would be normal. Rent-free house, because you have only one rent-free house. The problem will arise. The note number 5 talks about for this situation that what will happen if you are having more than one rent-free house. So for these 5 months, you are having two rent-free house. No new concept, no new calculation. They are just explaining this. So note number 5 says for the first 90 days, or we can say for first 3 months. That means August, September, and October. So income tax provides you 3 months. When you are having two multiple houses, then income tax provide you 3 months. That for 3 months, we can understand it will take time to shift from one residential property to another. And for that, we are understanding that 3 months we are giving to you. For 3 months, you are having both property, Delhi and Lucknow. But still, we will only tax one. Only one rent-free house would be taxed. Only one. Value of Lucknow. Out of these two, whichever is lower, we are going to take that as a taxable value for 3 months. So we expect that within 3 months, you will shift. So for 3 months, we are giving you the advantage that even if you are having two rent-free house, we are only going to tax one, which is having lower taxable value. The taxable value you are going to find out as per the provision of rent-free house, 10%, etc., whatever it is. But after 3 months or 90 days, even if for remaining time you are having two rent-free house, in this example, two rent-free house for 2 months. Now we are going to tax both. Now we will tax Delhi rent-free house taxable value also, and as well as Lucknow. So for the time duration which exceed 90 days, and even if you are having two rent-free house, so after that, both rent-free house taxable value is going to be taxed in your hand. So I told you there is no new calculation. The calculation is just same. Let me give you an example of it. So you would be able to understand that there is no new calculation. Already I have written this example for case number 5. So from 1st April to 31st of July, for these 4 months, rent-free house, Delhi is going to be taxed. Suppose salary is 50,000 per month. And this is monetary salary for rent-free house. Suppose it has been given in question or we have calculated. And the property was owned by employer. He has been shifted from Delhi to Mumbai. He has been transferred to Mumbai on 1st August 2025. Till 31st December, he has occupied 2 rent-free houses, Delhi as well as Mumbai. During this duration, salary has been increased to 60,000. And this property was on rent. Employer take this property on rent of 5,500 rupees per month. From January 1st, January 26, he vacate Delhi rent-free house. Understood? Now for these 4 months, we need to tax Delhi rent-free house value as per the provision. So that would be 10% of salary. That will come 5,000. For 4-month taxable value would be 20,000. Easy. Now for these 5 months, August, September, October, November, December. For 3 months, we have to find the taxable value of both. So taxable value of Delhi we have already calculated, that would be 5,000 per month. Now if we'll calculate the taxable value of Mumbai, and in Mumbai the property is on rent, so we will take 10% of salary, that would be 6,000. Or the rent paid by the employer 5,500, whichever is lower. That means the taxable value would be 5,500 if the Mumbai property need to be taxed. So that would be 5,500. Now for the purpose of taxability, the lower can be taxed for 3 months. So the lower would be 5,000 into 3. That means for these 3 months, the taxable value would be 15,000 students. So this is first taxable value. This is second taxable value. Now, the provision will activate because you have not vacated the property within 3 months or 90 days. So for remaining 2 months, now both is going to be taxed. For these 2 months, both. For these 3 months, lower needs to be taxed. Both taxable value we have. The Delhi taxable value already we have calculated would be 5,000. And the Mumbai taxable value is 5,500. So total is 11,500 for 2 months is going to be taxed. So that would be 23,000. So this is third taxable value. So this is just calculation we are doing. There's nothing new provision. Now from January onwards, the taxable value would be only Mumbai taxable value, which is 5,500 into 3. 16,500 would be taxable value number 4. So if you will add all these values, 20,000, 15,000, 23,000 and 16,500, that would be the taxable value for rent-free house in aggregate. So you can see case number 5 is having no new provision. It's just a situation that if you have 2 rent-free house, then how to calculate which rent-free house value for the purpose of salary calculation. I hope it's clear. You can take the screenshot of this kind of question. Here is a provision regarding it. Case number 5. You can go through it. Now a general note, and this general note is general. It is applicable for all perquisite, not only for rent-free house. This is applicable for all perquisites. All perquisites. Any kind of perquisite. And it says a very simple thing. If any amount recovered or received in respect of any perquisite, including rent-free house, it will be reduced from the taxable value as calculated above. Perquisite means which has been received by an employee free from employer. Suppose employee appointed a cook or driver. Employer say we will pay the salary. The salary is suppose 10,000 rupees per month. Employer say we will pay the salary. And employee appoint a driver for his personal purpose. So this is obligation of employee met by employer. So in normal case, if I'll ask your taxable value, the taxable value would be 10,000 per month. Now suppose the question say that employer say we will pay the salary, but 2,000 rupees per month need to be paid by the employee. So employer say we will pay the salary, 10,000 rupees per month, but 2,000 for this facility need to be paid by the employee to the employer. So if 10,000 paid by employer and 2,000 you need to pay to the employer, what is the free amount you are getting? It's 8,000. So taxable value would be 8,000. Suppose employer says, as in this question we have gone through, the taxable value case, how much is the taxable value total if we calculate? 20,000 plus 15,000 plus 23,000 plus 16,500. It's 74,500. Now suppose in this question, it has been given that employer charges 1,000 rupees per month from employee for this rent-free house facility. So taxable value means this is the free value an employee is receiving. But if you need to pay some amount to the employer for any kind of perquisite, so that means now this is not the free value. The free value would be 62,500. It's just like that. If your friend asks you that I will show you a movie, the ticket is for 1,000 rupees. And he say you need not to pay anything. So perk value in your hand is 1,000 rupees because you get the benefit of 1,000 rupees. If he'll say I'll show you a movie, you need not to buy the ticket, but you need to pay 100 rupees. So now 1,000 rupees ticket, but you need to pay 100. So that's why now your perk will be 900. Suppose he say I will buy a ticket for you. You need not to buy it, but you need to pay 1,000 rupees to me. The ticket value 1,000 and you need to pay 1,000 to him. So there is no perquisite. So perk means something is free. So in any perquisite, let me tell you again, this is not only for rent-free house, this is applicable for all kind of perquisite. If any amount is recovered from employee by employer, that amounts need to be reduced from the taxable value of the perquisite. I hope it's clear. Now the motor car perquisite. As you have seen, we have gone through with the 5 cases of rent-free house perquisite, and in my opinion, and it is true, rent-free house considered as a complicated perquisite. In all the perquisite, whatever we have gone through, rent-free house and car facility, they are having multiple cases. As you can see, there were almost 5 cases. So do you think rent-free house is a difficult perquisite or complicated? If you are able to find out the salary correctly, and salary is also simple, all monetary payment except arrear of salary, advance salary, and dearness allowance only we will consider, which is as per terms of employment. All other allowances will be there, but dearness allowance we will only take that which is as per terms of employment. So if that salary you are able to calculate, and let me tell you, it's easy to calculate. Very easy to calculate. Then you just need to understand which point I need to apply, which percentage. So if you are able to find out the correct case of rent-free house, you will be able to solve that question correctly. Understood? In the same way, motor car taxability is having multiple rules. And as I am teaching from last so many years, almost 23, 22 years, I know now your brain has been already consumed to understand the provision of rent-free house. And now if any other provision, which is equally complicated, if I'm trying to tell you that provision, maybe you won't be able to get the concept. So car perquisite, we will discuss in the next class. But some small perquisite, easy points, I am going to discuss with you. So that will not create a problem and you will able to understand the concept easily. And now point number 3. As we have seen, there was some obligation of employee met by employer. There were provision like domestic servant, etc. So one by one, they are simple point we have already understood. If these are the obligation in which bill in the name of employee or person appointed by employee, paid by employer, this is taxable for all employees. And if the person has been appointed by the employer, if that servant has been provided by the employer and he is paying him directly, then that is only taxed in the hands of specified employer. If servants are engaged by employee and employer paid or reimbursed the employee for the wages of such servant, it will be a perquisite in the hands of all employee. Why? Because the bill would be in the name of employer. But if the domestic servants are engaged by the employer, now employer has provided you the servant directly. They employed and they provide that servant to you. And facility of such servant is provided to employee. It will be perk in the hands of a specified employee only. So we have gone through with this concept earlier. You can read it. Again, that concept, if anything has been recovered from employee, that is going to be reduced from the taxable value of that perquisite. Next is valuation of gas, electricity, water supplied by employer. Again, same case. If gas, electricity, water connection are taken by employee, that means bill in the name of employee. So this kind of perk is going to be taxed for all employees. But if gas, like you need a gas, employer said, do not worry, we are sending you gas cylinder directly. You need not to take gas connection, we will provide you a cylinder. So that means that gas cylinder must be in the name of employer. So this kind of facility has been provided that you don't need to take electricity connection. We will take electricity connection, our name, in your house and you can use it. Do not take water connection in your name. We will take that connection and you can use it. So if this kind of facility is provided, so this is not for non-specified employee. This is for an employee which must have been a specified employee only. But if the gas, electricity, water connection are taken in the name of employer and facility of such supplies are provided to employee, it will be perk in the hand of specified employee. If that is a non-specified employee is getting this kind of perquisite, it is not going to be taxed, it would be exempt. There would be two situations. If payment is made to agencies supplying gas, electricity, etc. So how much amount is going to be taxed? Let me tell you. If you are working in a bank, and the bank employer, provided you free 2 gas cylinder in a month, whether it's bill in the name of you or it's in the name of employer. So if you are a specified employee, then that bill case would be taxable, else not. What amount is going to be taxed, that we are discussing. So if 2 free cylinder is being provided to you, then whatever is the market value at which the cylinder has been purchased by the employer. Suppose employer has purchased a cylinder for 1100 rupees. So for 2 cylinder, they have paid 2200 rupees. So that is going to be taxable value in the hands of employer. So if that facility has been purchased from outside, the whatever amount employer paid to the agency, that is going to be the taxable value. Now suppose if supply is made from resources owned by employer. Now suppose you are working in a gas company a gas cylinder company you are working. And now employer say we will provide you 2 free gas cylinder. So now these gas cylinders not need to be purchased from outside because this is the manufacturing product what the employer is manufacturing for you. So now the market value would not be taxable value. That in first case, it was technically the market value because whatever you will pay to the outside agency would be the taxable value. But because you are manufacturing it yourself, then the manufacturing cost, suppose the manufacturing cost is 600 rupees per cylinder. So if employer is providing you from his resources, in that case, this 1200 rupees would be the taxable value in your hand. The basic simple concept is whatever has been the cost to the employer would be the taxable value. So if he is not manufacturing, he needs to purchase it. So the purchase price would be the taxable value. If he is manufacturing that thing, then of course he need not to purchase. In that case, manufacturing cost would be the taxable value in the hands of the employer. So very basic and conceptual concept is here. The same note we have discussed earlier also. If anything has been paid by employee or anything has been charged from employee, then that is going to be reduced from the value of the perquisite. Now, valuation of pre or concessional education. It is also again almost same like the electricity, gas provision we have gone through. So it says if employee children are studying in any educational institution and employer say we will reimburse the fees, etc. So there could be two situations. One, the educational institute is owned or maintained by the employer himself. Suppose employee is a teacher in a college or in a school. In that school only, employee children studies. So the school says, we won't charge any fees from your children. So in this case, the employer maintain the school in which employee children take or studies. So in that case, that would be a case in which the employer also carry or maintain that organization. So provision would be different. But suppose you are a bank employee and your bank says that whatever fees of your children's studying in any school, we are going to reimburse it. In that case, whatever fees the bank is reimbursing would be the taxable value. In the first case, the taxable value would be nil if the fees is 1000 rupees per month per child. If it exceeds 1000 rupees per month per child, then the amount is going to be taxed. If the school fees of children of employee or any member of employee's household is paid or reimbursed by the employer on employee's behalf, it would be perquisite in the hands of all employees. But if the education facilities provided in a school maintained by the employer, then we have to see what is the market value of that piece of similar school. Up to 1000 rupees would be exempted per month, balance is going to be taxed. Or in any school by reason of his being employment at free cost or concessional rate, it would be perquisite in the hands of specified only. The value of benefit to the employee resulting from provision of free or concessional education as follows. If the educational institution is maintained and owned by employer, or if free education facilities are allowed in any other education institution by reason of his being in the employment of that employer. So employer is a big group. Suppose you are working in a Tata company in any Tata Motors, and Tata Group is also having a school in which your children is studying. So these both cases having the same treatment, whether your employer directly maintain that school in which your children study, or that would be a school due to your employment. In that school, your child is studying. in both cases directly, indirectly controlled by your employer. So in this case, the taxable value would be the market value of similar institution, cost of such education in a similar institute. Suppose that is 3,000 per month in a similar school. However, there would be no perk if the cost of such education or the value of such benefit per child does not exceed 1,000 per month. So if it is 3,000, 1,000 per month could be exempt and balance is going to be taxed. If it is suppose 900 rupees per month, then nothing is going to be taxed because full value is going to be exempted. In the case of children education allowance, the maximum number of child was 2, but there is no restriction like this in this case of facility. Even if employee 3 children is studying in a school maintained by employer, all 3 can claim the exemption of 1,000 rupees per month per child. If the school is other, not owned or not connected by employer, then the actual amount of fees, whatever paid by employer, is going to be taxed. Suppose if this case is 3,000 per month, then full value is going to be taxed. 1,000 exemption not available. 1,000 is only available if the educational institution is owned by employer or due to the employment, you are able to make your child study in any organization, but due to the employer indirect connection. So this 1,000 rupees per month exemption, please remember it. Where any amount paid or recovered extra, that is going to be reduced. The exemption of 1,000 is only in case of education facility provided to the children on the employee, not in case of educational facility provided to other household members. So I hope it's clear, and I believe that a lot of provision we have discussed today. So not going to discuss any more provision. It would be really difficult for you to understand because we have already gone through multiple provision in today's class. So if you have any query, student, you can ask, and I would like to give some questions as a homework out of today's class. In salary, now you can try. Illustration number, please write it down. Illustration number, students, you can try illustration number 6. Illustration number, I guess 6 I have given, I believe. Illustration 6 I have given you in last class, I guess, yes. If not, then you can try illustration 6, illustration 7. Illustration number 9. Where is it? Let me see. Illustration number 8. We have skipped. Gratuity, RPF. Yes. Illustration number 8 also you can do. Illustration number 9. Illustration after 9 we have to do. Okay, Ketan, thank you. Okay, so after 9, 10th you should not try because that is problem number 9D, as I've told you that we will discuss in the last class. Okay. So illustration number 11, that is for LTC. As I've told you, LTC concept, twins, etc. would be there. Illustration number 12 also. Illustration number 13, that is for medical facility. Illustration number 14 for rent-free house. Illustration number 15 for rent-free house. Illustration number 16, because now you have class on Tuesday, so you have a lot of time for all this thing. Illustration number 17 also. all for rent-free house. 18. 19 for domestic servant, obligation of employee met by employer. Very small questions these are, not very lengthy. We'll be able to solve this question in 2 or 3 minutes. Okay, so I guess this is enough. Test your knowledge question. I guess I will help you to solve all these test your knowledge questions when we will complete, I guess, provision. Then in the last class, the important test your knowledge question I will solve those questions for all of you. Okay, so now let me see if there's any query, student, then you can ask me. Mr. S.K. Naam is saying, sir, if employee has forgot to take exemption in previous year, can he take exemption in next financial year? No, not possible, because you can revise your return. In that situation, you forgot to claim the exemption. But when you try to revise your return, there are some restrictions. There is a concept of updated return in which you can revise, but due to that revision, your tax liability cannot be reduced. So if there is no impact on your tax liability, in that case, revision is possible, but that concept you will be able to understand in the chapter of return filing. But for time being, if I would like to tell you if this question is there, I would say no, because that is connected with the return filing concept. Return filing mein, you have to take the benefit in the previous year return only. You cannot take the benefit in next year. That is not allowed. You can revise your return in the previous year return. This exemption cannot be carried forward in any of next year. So the answer is no in this case. Okay. Aditya is saying, sir, in calculation for 4 months, we can take 4/12 months for calculation. Why we can't take? What, in which question you are talking, Aditya, this 4/12 month calculation? Are you talking about that rent-free house case number 5? Please let me know how it is possible. Why we will take 4/12? We have to take each month taxable value. So that 5,500 or 6,000 was per month value for each month. So for 4 months or 3 months, whatever you are need to calculate, you need to multiply it. How you will take 4/12? Your 4/12 would be wrong because salary has been changed. You cannot find out the full 4-month value proportionately. You have to take each month's separate value. This 4/12, I'm not getting why you are asking, because this 4/12 proportionate not applicable, because for every month you have to calculate the value. Okay. Any more query, students? Okay, you can send your query and so that we can start a story. If there would be any query, we will take that. So story बड़ी छोटी सी है और इंटरेस्टिंग सी है. एक स्कूल था, उसमें एक रेस होनी थी बच्चों की. छोटे बच्चे थे उसमें, लाइक फर्स्ट सेकंड थर्ड क्लास वाले. तो स्कूल में जो 100 बच्चे थे जिन्होंने उसमें पार्टिसिपेट किया, उसमें से 10 बच्चे सिलेक्ट हुए, क्योंकि जिन्होंने पार्टिसिपेट किया उनके ट्रायल्स हुए. ट्रायल में 10 स्टूडेंट्स जो फाइनल रेस में हुए वो सिलेक्ट हुए. उनमें एक बच्ची थी, उसके फादर ने उसको प्रॉमिस किया कि अगर तुम टॉप 3 में आए, अगर तुम जीत गए, एक्चुअली अगर तुम जीत गई तो मैं तुम्हें जो तुम्हारी फेवरेट जगह है वहां ले जाके आइसक्रीम खिलाऊं. दैट गर्ल वॉज वेरी हैप्पी कि मैं आज रेस में दौड़ूंगी और मैं अगर टॉप 3 में आ गई, क्योंकि मेरे पापा ने मुझे कहा है कि अगर मैं जीत गई, जीतने का मतलब 1 2 3 में आई, तो मुझे मेरी फेवरेट जगह पर आइसक्रीम मिले. एंड रेस स्टार्ट हुई, बट शी केम 4th. तो वो बहुत सैड हुई, बहुत डिप्रेस हुई कि मेरे को आइसक्रीम नहीं मिलेगी. एंड उसके फादर आए, उन्होंने उससे कहा वेरी गुड, चलो तुम जीत गई, आइसक्रीम खाने के लिए चलते हैं. तो उस बच्ची ने पूछा, मैं तो हार गई, मैं कहाँ जीती, तो आइसक्रीम क्यों मिलनी चाहिए, मैं तो 4th नंबर पर आई. उन्होंने बोला नहीं, तुम कहाँ हारी, जो तुमसे पीछे बच्चे हैं जो 4th के बाद आए हैं, 5 6 7 8 9 10, तुम उन सबसे तो जीती गई ना. बात तो जीतने की हुई थी, फर्स्ट सेकंड थर्ड की नहीं हुई थी। तो तुम उनसे जीती, सो दैट इज इक्विवेलेंट टू अ विनिंग। तो ये बच्ची वो सुनकर बहुत खुश हुई। अब प्रॉब्लम क्या थी कि जब ये बात चल रही थी तो एक बच्चा जो 6th 7th नंबर पर आए थे, जो बच्चे पीछे वाले 5th 6th 7th 8th, वो बहुत सैड हुए। तो उन्होंने उसके फादर से पूछा, तो अंकल मतलब हम लोग हार गए? उन्होंने कहा, अरे नहीं नहीं, तुम लोग भी जीत गए। वो सब भी सरप्राइज हुए कि अभी तो आपने बोला कि ये हमसे जीती, तो हम तो फिर हार गए ना। उसने कहा, नहीं नहीं, तुम लोग भी तो जीते ना। 5th वाला 6th वाले से जीता, 6th वाला 7th वाले से, तो तुम सब भी किसी ना किसी से जीते। तो तुम लोग भी सब जीते, हारे कैसे? तो 10th वाला सबसे ज्यादा उदास हो गया। 10th वाले ने कहा, मतलब मैं हारा एक्चुअल में, ये सब जीत गए। एंड ही बहुत स्टार्ट क्राइंग। तो उसके फादर ने कहा, तुम क्यों रो रहे हो? बोला, मतलब आपने कहा ये सब जीते, सबसे लास्ट में तो मैं ही आया, तो मैं तो हार गया। उसने कहा, नहीं तुम भी जीत गए। उसने कहा, मैं भी जीता हूं, तो अंकल अब ये बताओ हारा कौन? तो उन्होंने कहा, सिर्फ दो तरह के बच्चे हारे। एक तो वो बच्चे जिन्होंने उस 100 रेस पार्टिसिपेशन में पार्ट ही नहीं लिया। इट हैपेंस मेनी टाइम्स ना, कि कोई कहीं पर क्विज कॉन्टेस्ट होता है, कहीं पर कोई डिबेट कंपटीशन होता है, आपके सीए में भी होता है, काफी सारे प्रोग्राम होते रहते हैं सिकासा के। एंड उसमें कई बच्चे ड्यू टू हेजिटेशन, एंड इफ नॉट इन सीए, इन स्कूल लाइफ भी ऐसा हुआ होगा ना, कई जगह आपको लगता है कि ड्यू टू हेजिटेशन डिड नॉट पार्टिसिपेट। आपको लगता है आप कर लोगे, लेकिन एक डर होता है हमारे अंदर जिसकी वजह से हम पार्टिसिपेट ही नहीं करते। तो वो जो 100 बच्चों ने रेस में पार्टिसिपेट किया, उनके अलावा ऐसे बच्चे भी थे जिन्होंने पार्टिसिपेट नहीं किया इस डर से कि हम तो जीत ही नहीं सकते, तो उन्होंने ट्राई ही नहीं किया। तो एक तो वो सारे बच्चे हारे जिन्होंने ट्राई ही नहीं किया, क्योंकि वो कोशिश ही जो नहीं करता वो तो हमेशा हार जाता है, क्योंकि कोशिश करने वालों की तो कभी हार नहीं होती। और जो 100 बच्चों में से जो सिलेक्ट होने के बाद भी, जिनको पता था हम 100 हैं और हम में से अभी सिलेक्शन होगा टॉप 10 का विद इन अ वीक एक्सेट्रा, जिन्होंने उसके लिए फिर प्रिपरेशन ही नहीं करी, सिलेक्शन के बाद भी कैजुअल रहे, उन्होंने मन ही नहीं था कि हम इस रेस में आगे जाएं, किसी तरह सिलेक्ट हुए, लेकिन दे वर नॉट रेडी टू वर्क हार्ड फॉर व्हाट दे वांट टू अचीव। तो वो बच्चे जो 100 में थे लेकिन उन्होंने ना 10 के लिए कोशिश करी, और जो 10 में भी थे जिन्होंने कोशिश नहीं करी जीतने की, वो सारे बच्चे हैं। तो जब तक आप कोशिश कर रहे हैं, अपना बेस्ट कर रहे हैं, आप कभी नहीं हारते लाइफ, हार ही नहीं सकते। मे भी हो सकता है आपका एक अटेम्प्ट ना निकले, 2 अटेम्प्ट ना निकले, बट अगर आपने पूरी कोशिश करके वो एग्जाम दिया ना, तो कभी डू नॉट फील योर सेल्फ एज अ फेलियर। फेलियर वो है जिसको पता है एग्जाम है लेकिन फिर भी नहीं पढ़ रहा, टाइम पास कर रहा है, घूम रहा है, सेक्रीफाइस नहीं कर रहा है, वो है फेलियर। वो जो सीए करने से डर रहा है कि मैं तो सीए कर नहीं पाऊंगा क्योंकि ये तो बहुत डिफिकल्ट होता है, तो मेहनत से पहले ही हार मान चुके, वो भी फेल किया। तो अगर आप इन दो कैटेगरी में नहीं आते, इवन फेल होने के बाद भी आप लर्न करते हो अपनी मिस्टेक और नेक्स्ट टाइम के लिए पूरी कोशिश करते हो, अपनी पूरी कोशिश, यू आर अ विनर, बिकॉज समडे यू विल बी विनर। वो एक बड़ी इंटरेस्टिंग सेइंग है कि सक्सेस विल बी आफ्टर द डोर ऑफ फेलियर। तो जहां आपको फेलियर की डोर दिख जाए ना भी लाइफ में कि आप फेल हो रहे हैं, समझो सक्सेस उसके पीछे ही है बस। तो उस डोर को ना खोलना नहीं है, तोड़ देना है। जस्ट ब्रेक इट, यू विल फाइंड द सक्सेस। सो कोई तब तक फेल नहीं मानेगा खुद को जब तक आप मेहनत करना नहीं छोड़ेंगे, जब तक आप ये ना सोचें कि मैंने एफर्ट किया है, अच्छा अपना बेस्ट दिया है, तब तक आप कभी फेल नहीं। ओके, सो दैट वाज द स्टोरी फॉर ऑल ऑफ यू। प्लीज पढ़ते रहो, मेहनत करते रहो, एंड सक्सेस विल बी इन फ्रंट ऑफ यू वन डे। And as I always say, that one day will come after day 1 mehnat, day 2, day 3, day 4, and that is equal to one day success. ओके महक सिंह सर, आपकी स्टोरी बहुत अच्छी लगती है, शुक्रिया, धन्यवाद। केतन, वैल्यूबल टाइम इंटरेक्टिंग सेशन, थैंक यू। ओके, श्रीधर सिंह सर, विच फॉर्मेट इज फॉलो टू राइट सॉल्यूशन इन नोटबुक इन एग्जामिनेशन? In your study material, the solution pattern has been given in case of salary, etc. So you have to follow that pattern. Okay, Sridhar. Any more query from anyone? Because if there is no query, we will going to close the session. Anjum is saying thank you. Okay. Sridhar is saying thank you, sir. Ashok sir, there is no more query, so we can close the session. Yes, sir. Well, thank you, sir. Thank you. Good day.